This is the first video for the balance sheet section of the BK Demo Data Guide, and we've done some reorganization here where part 2 is now on its own page. This is reorganized since the last video was shot for the income statement. We've actually split the parts off. So I'm looking forward to this video almost as much as I was looking forward to the initial income statement video. Our balance sheet is really, really something special. And this won't be appreciated by people who aren't familiar with bookkeeping and accounting prior to this. The problems with understanding what a balance sheet was, how it worked, how you could troubleshoot it, especially in the digital space, was just a train wreck. And this came about probably in the year 2019 or so. I had been working on the Zap accounting software system for probably 3 years, on and off. The proof of concept for the income statement and the chart of accounts was probably 2016-ish. And it happened about 2 hours. So I needed 2 hours one night. I sat at home and got frustrated with QuickBooks Online that I was trying to help somebody else out with because I didn't want to put on my own accounting system, and did a proof of concept. I said, okay, I can do this. And then we probably went through 6 iterations, 8, 10 iterations with Rick, and just got getting better and better. And, first I got working with spreadsheet equations and just a spreadsheet look. And then I slowly started transitioning it into the database system. But we hit a kind of a wall late 2017, early 2018, where I was just going to do a manual balance sheet. And as long as the income statement worked and it was easy to find the errors, there were some cross-check systems that we implemented that were really cool. But then, I realized it was great for education. It was good for programming, but without the balance sheet, a fully automated one, the audience was going to be very limited. And so I was on a plane in, I think it was probably 2019. And I did a proof of concept flying across the country. It took about a half hour, 45 minutes. And I finally had everything in place. And I started writing that complex union query and did it on like 3 different pages. And poof, I got it to work. I was like, okay, I can do this. I'm pretty sure I can do this. And then it sat in a box probably for a year while we finished cleaning that up and building out a whole bunch of other stuff. And then COVID hit. And I thought, well, no time like the present than to dust off the magic box and open up Pandora's box and see what we can create. So probably took about a month or two to get it to where it was looking about like it is right now. And then it's evolved even some since then. So it was probably about a year ago 11 months ago that I started messing with it at a commercial level. And then it got to this point probably about 3 months ago. So this is something special here. So a balance sheet. We've changed the name some. We call it a balance sheet, but it's really a comparative net worth statement. And we're using this set term net worth instead of retained earnings because it's easy to understand. Your net worth, if you get clipped by a bus today, is how much do your heirs get? Take all your assets, all your cash and things of value, sell them, turn that to cash, pay off all the people that you owe or the credit card companies or your student debt or whatever else is required to pay off. And whatever's left is your net worth. That's what net worth is. Now, for a company, net worth is the same thing. Come down to the bottom, and what they used to call the assets and liabilities section, the ridiculousness of the vocabulary for the balance sheet is laughable. You used to have an assets minus liability section and an equity section. And they'd say, well, assets minus liabilities equal equity. Well, if assets minus liabilities equals equity, then equity equals equity, or assets minus liabilities equals assets minus liabilities. It was a circle. It's like saying apples equals apples. So they'd also say that a balance sheet was a snapshot in time, which was just fully false. Half of the balance sheet is a snapshot in time, half of it. The balance sheet is 2 separate reports that are created dramatically differently, and the 2 reports have to come to the same conclusion. Our bottom half of the balance sheet is oftentimes the top half in other balance sheets, or the left half. And this is the snapshot in time. Company net worth is a list of all the assets of the company minus a list of all the liabilities is the company net worth. Just common sense. It's just like personal net worth. So this doesn't equal, and you can call it equity if you want, but we're just going to call this net worth. It's a nice, easy vocabulary. So this part's easy to calculate. Now the trick here is that this needs to come from a third-party source. If this just comes from your books and your books are screwed up, you're screwed. So This has to come from bank statements. So the bank statement on 12/31/2016, because that's the end date of this report, says that this is the value in the account. If the bank statement is what we're using, then if I want my software to match that exactly, I have to use the same transaction dates in my software. If I use the same post dates in my software. If I use transaction dates on 12/31, let's say that I bought something on 12/31, that on Christmas Eve I bought a pack of candles for my office. If those don't hit my credit card until 1/1, but I enter them as a 12/31 purchase, then my checking account on that date will not show that transaction, but I'm saying that it happened. The balance sheet will never ever balance. You would have to make adjustments and go in and figure it out. So CPAs know this, bookkeepers know this. It's the person who picked up QuickBooks that can't figure out why they can't ever get their balance sheet to balance, and nobody's ever just broken it down to it. It's about the transaction date versus the post date. That's it. That's the entire trick. Okay, you have to use the dates that your bank has for all of your transactions to make this relatively simple. Well, if you have to do that, then you just download your transactions after the fact. If you have to do that, then you're not going to use this as a check register to track transactions as they transpire and then check them off as they come in, because you would need to change the transaction date to the post date to even remotely have a prayer at getting your balance sheet to work. Hopefully that relieves half of the mystery of this thing. So in our software, because we always get our software from the bank data, this value is actually coming from our software, but in fact, it aligns with the statement as well. And we know that because we have our statements worksheet that makes sure that it aligns with the statements as well. Okay. So this is the trick. So this part's easy. This is basically what's on the bank statements, and the bank statements match our software. So we're generally pretty good. In the programming section, I'll get into how the equations that are used. So the equations that are used for this are in this column here right now. And then there's cool descriptions that help you understand where we're getting the data from. Is it account type minus account type? This is just a summary of an account type. This is an account subtype. So everything you need to know about how we build this thing is actually contained here too. There's not even a help manual. It's all right here. So this part's easy. This part is also easy if you understand it's about taking a starting net worth value from, so I have to run another version of this report for a date prior to the end date. So prior to 12/31, I have to run this entire report, get the number, and put it right there. Okay? So I have to run a whole nother version of this report for a prior date and put that number right there. Then what I do is I take all the income since that date, minus all the cost of goods sold, minus all the expenses. Well, hold it. That's the income statement, right? But what we're doing now is what we're doing in simple terms is we're taking the cash flow in, which is income and paid in equity, and we're taking cash outflows, which would be expenses, cost of goods sold, expenses, non-cost of goods sold, owner draws, and we are coming up with what should be the new net worth. This is just a cash register problem. I started off with $100. I added 15. I added 30. I gave away 5. I gave away 10. I should have whatever that number comes to, 120 at the end of the day. That's all this top half is. It's a cash register problem. The thing is you have to understand that you have to start with a bank that's in the cash register to start with at some known point in time. That's a balance sheet. The cross-check portion of this, now this ZAP special, it should always be 0, except there are times when you want to make adjustments, short-term adjustments, and then there's also when you start a new file and you don't go back to the beginning of time for the company, so when everything was 0, you may have to do some adjusting entries at the beginning. And so the standard way to do that is to use what are called suspended expense accounts. It's an expense account that's trash. You put stuff in there just to satisfy the double entry accounting system, but then you remove it from reports where it's relevant, like an income statement and here, to avoid screwing up the balance sheet. So instead of doing that, we created an entirely different account type, which we talked about in the chart of accounts. So this is a really cool feature. It makes everything transparent. There is never any transaction that is not going to show up in here somewhere. It's all transparent. So if for some reason there is a reason to use what would have been a suspended expense account, you would see it on the balance sheet and it would trigger a comment or a note or a conversation. So the other thing that's unique about this is that we can change this balance sheet to start from any day we want. In the traditional sense, see how this is changing? Just okay. In the traditional sense, I can start a balance sheet at April 21st. I can check any date range I want. In the old-fashioned version, you would always go, let's say, month to month or quarter to quarter, and you'd have to do it every month, and you're carrying this balance over. That's garbage. That's archaic. That's silly. You've got an automated system now that all we need to do is go back to the beginning of whenever we want to, count the beginning of time and put the start date in, and everything between then and today better reconcile. So you're looking at an entirely different paradigm for data management and data accuracy and data integrity that doesn't exist. What we also did was we moved in a traditional system. This balance sheet information would just come in as net income. You'd just see a record here of 59,000. So it'd say starting net worth, and then change in equity of 59,000 from the income statement, and then you'd have another report that was a equity. I think it's called, I can't remember, change in equity report, and it would just aggregate negative 37,000 from the change in equity report. But you wouldn't know if that was paid in equity or owner draws. At the balance sheet level, you would just look at these summaries. And the problem was there was just nothing to hang on to, meaning it was just like ice. You looked at it and either it came out right or it didn't. If it didn't, you had to start digging down to figure out what it was. We just pulled all those individual line items up here. And on the configuration guide, you'll see how easy it is to add more. I can just insert rows and pick new categories, and then I copy this, adjust the program. It takes me literally 10 seconds to modify this thing, and it just works like a charm. So this is paradigm busting for bookkeepers, accountants, CPAs, small business people. But it's not just this that makes it more transparent and easier to understand. If you have problems, if there are things out of balance, which I'm going to do a video later on where I change some things, they go out of balance. And there's also some videos, I think, on the use videos. I actually do this and I show where there are some things out of balance and I show how to do it, but I'll do it later. But the bottom line is I have a drill down report here, which allows me to, these are all the transactions that went into making this. And if I limit it down, let's say I go from 1-1 to, 1-1-5. We just want to look at a couple of transactions. Okay. Well, that might be too many. 1-1-3. Okay. So I've got a balance sheet here that goes from 1-1 to 1-3. On 1-1, I had a starting balance of 784, and on 1-3, I had an ending net worth of 779. And look, if I look down here, it's 779. It's in balance. These are the only transactions that contributed to this change. So there's a $5 transaction right there. So I've got a zero transaction, a debit and credit and zero. There's a ZAP special, because what I've done is I've included an opening balance. And that's where we've used a ZAP special to make sure there is a record to offset this entry here. And it had to come from somewhere, but it was a ZAP special. In this case, since it's zero, it doesn't really look funny. If it's got a value, then like if the opening balance had been $30 and we weren't starting with a blank account, we'd actually see a $30 value in here. And that value would be in there forever, but we could always look at it and see what it was. So I've got 0-0 and I've got a 5-5. So I can see exactly what's contributed to this section of the balance sheet. Makes troubleshooting a dream. If I go here and I go to 12/31/2016 and it's out of balance, I just start backing my way down until I find the actual date it went out of balance. When I do that, I would change this to the end date. So this is the full date range. Give me all the dates. I could change this to end date, no matching records. But if I change this to 1-2, so the start date was 1-1 and the end date was 1-2, it now just shows me the transactions on 1-2. So I can find the exact date it goes out of balance. I can run a report on the end date transactions right here. I can see what they are, and I will be able to see what is causing the imbalance. It's fully transparent, makes troubleshooting a balance sheet a breeze. So super, super powerful, and I've not seen anything like this, even remotely like this, in any software systems. I haven't done a tour of any lately, but most people I'm showing it to are just blown away. So that gives you the balance sheet. There is another drill down. It's even further So you've got the drill down here, but then there's another report that can work off of these. I haven't even used. I built it thinking it was pretty cool, but I haven't even needed to use it. But it's an additional filter. So if you get these here, but you want to filter on it, you could also filter using the filter tool. You can actually do this and click the filter and then filter more on this. Pretty slick stuff that you learned how to use the filter a little earlier. So that's the balance sheet in a nutshell. That's how it works. So with this, we no longer use, there's a balance sheet historical worksheet in here, which is really ugly. That has the original demo data in it. And that shows you if you wanted to save a balance sheet, I've got a 1/1 to 12/31/2015. So I've got an annual balance sheet here. Then I've got a quarterly here, 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 and here. But we don't even use this anymore because the balance sheet is basically full, live, and hot for anything we want to do. We just set it back to almost the beginning, and then we just keep adding to it. And as long as we're green, we have a perfect cross-check system. So this last thing in here, I put this in here at the very beginning of doing this. I think there was a problem. I was trying to figure out, I was just looking at gross equity, and I don't know. I wanted to know how much of the starting net worth. Okay, how much of the starting net worth was from paid-in equity? So this starting net worth right here is 784, but how much of that actually came from paid-in equity? For some reason, that was of interest to me. So I wrote this report and I've never taken it out. You could delete this if you wanted to. And this balance sheet troubleshooter, you can also, that tells you what may go out of balance. And this is really old, archaic stuff. I can probably pull this out. There was a whole other system for managing the balance or managing inaccuracies. And I think this was related to that. So this probably needs to come out. But so you can see the evolutionary process here. There is one other thing that's hidden. There is a way to recall. This will recall a prior balance sheet. If you pick dates that match right here. So let's try 1/1/2016 to 3/31/2016. 1/1 to 3/31. Okay. Now, this is showing up as current data, and this is showing up as it's in balance, right? But this is showing up as if it's not in balance. That number is different. I believe the demo data has changed since then. Or, no, you know what that is? That's the net income value. But this was before there was a time where I was just putting net income in here, and now we broke it to income, expenses, and COGS and expenses, non-COGS, but I never updated the historical to match. So what this will do is if you had historical balance sheets that matches this, it will put it in and just show you what you had at a prior time. Not needed anymore. It, again, is just kind of a remnant left over. I'll probably leave it in there just for now, and people can then either delete it themselves or modify it if they'd like, but at least they'd know how to do this. If they or their company feels like they want to have static snapshots and store them, that's fine. One of the problems with balance sheets is over time, accounts come and go, and then you just have to keep adding accounts to it, and it gets really wacky trying to take the data and add more accounts to debt accounts. And you can end up with some really ugly stuff if you turn over some checking accounts or credit cards, but still need the historical data. These lists just really build up. And I'm thinking with our system where we're not keeping the historical anymore, we're doing this, it'll be easier because I can just hide them or leave them exposed. But it makes it a little bit easier to grow. It should, is my expectation. So that's an introduction to the balance sheet. And again, I think this is going to wrap it up unless I get off here and figure out I've forgotten something. I think this will do it. The rest of the information for the balance sheet I will bring in on the programming side of things.